So Ophir, can you help us a little bit just with some background? How'd you get started in trading and investing?
Oh, that's a big question. Um, I guess the easiest answer is my first job out of undergrad in 1998 was as an investment advisor, which back then they used to call stockbroker
Yep.
for Payne Weber, which is now UBS. And then I started an options analytics technology company, believe it or not. And though I had some success academically, it didn't really take off commercially. So then I went back to school, got an MBA in finance, and worked in research. And then after that, I went to Stanford to get my graduate degree in financial mathematics. I was a structurer on the countrywide trade desk before it went, bankrupt. Then I was
Yeah.
a market maker on NYSE, ARCA, and SIBO option floors, and then into quant finance. Onward and upward.
Yeah. Which is so cool, man, because what you do is highly analytical, massively math-based. I mean, that's one of your specialties, but you also do it in the options world specifically. That's kind of like your forte, right?
Options is sort of one half, and long-term stock picks is the other. But yeah, I mean, I've been trading options since probably 1997, and I was a market maker. I was also the head of automated trading for a firm, algorithmic trading, really. And then I was a hedge fund manager, and we traded a lot of options during that too. So yeah.
Killer. I'm gonna dive right in, man, to some big stuff. Your opinion on massive open interest. Does it matter? Does it not?
No. So, well, it depends what you mean. You mean if you're trying to guess if there's a big bet or relative?
Yep. Yep.
Okay.
Exactly.
Order flow. Yeah. So, as a market maker for quite a while, and maybe more importantly, it's a small floor. And so we get to know the people who do what they do. And I've only met one person who could ever actually trade order flow for a profit. And it was nothing like FinTwit thinks it is. It wasn't about looking for a guy buying 10,000 nickels and then tomorrow a company gets taken over.
Yeah.
It was different. He understood that there were a lot of buyers for some reason. So he was, he was selling vol higher. It was very much about using volatility. I don't know anyone that actually makes money using order flow. And if anyone did a statistical analysis that really, really did it relative to like the baseline, I don't think it works. Having said that, to each their own,
Yeah.
I don't care.
Yeah, totally. Whatever they want to do. I mean, but I see so much of that, like you mentioned, the order flow, where it's like, oh, there's so many people, in this particular option contract. I'm like, well, the challenge is they could be buyers, they could be sellers, just because there's
It's
a lot of
also
open interest.
the reason is an opinion, of course. The
Yep.
reason people like to talk about order flow is because it's very, very easy to measure and it takes no education.
So can you tell us a little bit about what Capital Market Laboratories is?
Yeah. So I just got out of the company I worked for before. I was managing director of quantitative research, and I created a model for them and spun it up to a hedge fund. Anyway, when we sold that company, the chairman and founder said, he's James A. Kaplan. He's one of like the great grandfathers of modern portfolio theory. He's one of the founders of MarketWatch. He said, let's do it again, but this time let's do something for retail. And I was like, absolutely no way. Like, nope, not interested. Can't do it. I said, he said, why do you think they're dumb? I said, nope, they're probably smarter than the institutions. They get an hour of market time for every 40 hours that someone who works in finance gets. I mean, you're working a full-time job and you're supposed to be good at it. I mean, that's almost impossible. So my opinion of retail was very high. My opinion of their ability to consume the information I was going to share was very low because of time. It's impossible. It's impossible. It's just, how can you do that? How can you be successful and work? And people do it. So I just thought, nah, I'm not going to just forget it. I said, I'm out of it. I don't want to be I'm just done. I don't want to be in finance. I'm going to go back into science and just forget it. And he's like, nah, I think you're going to do it. And I was like, nah. He's like, well, the money's in the bank. And he showed me the corporate papers. I was like, okay, I guess I'm doing this now. And luckily he did. So with Capital Market Laboratories, I'm just taking my institutional background, and
Yep.
I'm bringing it to retail. And of course, with retail, what you're going to get is people who have to be much more discerning about the information they use because they have a very limited bandwidth. Like, what can and can't they do realistically if they have a job? Right?
Mm-hmm.
Their accounts, unlike institutional money, institutions don't trade their own money, right? So retail, I mean, retail traders, you're trading your own money. This is, if you have a P&L that's good for you, not because you get a percentage of it. It's your money, and if you do badly, you have to deal with that too. And that means that in retail, there's a lot of loss of perspective. There's a
Mm.
lot of, it's money in many ways, and for some people, really defines or partially defines like who we are and what our success is. And for some people, it isn't. But when you're in the market, it kind of is. And even more difficult, the market is measured on one thing. It's P&L. It's not like basketball where you're like, oh, I led the league in assists. Oh, and I got a big contract. But even if you didn't get a big contract, you say led the league in assists. The market is just the market. It's P&L. So retail gets it. They just don't have a lot of time. And
Yeah.
we brought institutional research to retail. So for example, one of our products, CML Pro, which is for stock research, we just talk to the CEOs of the most powerful companies in the world that we have on our list as top picks, and we just give you the exact same research an institution would get, right?
Mm.
Rather than having to read it on Yahoo Finance, which is written by a bad author in 11 days too late.
Yep.
And then in the office space, we bring the same tools that the institutions use, using the same data, right? So that's what Capital Market Laboratories is. In sum, it is breaking the information asymmetry that institutions have over retail. And I think the only person or people who could have done that would have had to be people who are institutional. And I don't know anyone in institutional finance that would have done this. I didn't even want to do it.
Yeah.
but our chairman did. And so that's what we do. So that's ultimately our goal is to mint as many, early retirees, parents who can pay off their children's school debt,
Yep.
people who can fund the philanthropy they want. That's all we're trying to do. And we get thousands and thousands of those a year, these, emails and notes. And it's just, that's it. That's the goal.
Love it, man. That's so awesome because yep, that's exactly right. You're pouring into someone else to make their financial future better for their families because they like this stuff. Most people who do retail trade, they don't, as you mentioned earlier, they don't know all that much. They have a full-time job doing something else. They're intrigued by the markets. They want to grow their money and they don't know that much. They need someone to kind of guide them in the system. It's awesome that
Yeah.
you're doing that.
It's a very, very difficult task to be as good at this thing we call trading or investing as people who do it for a living. I
Yeah.
mean, that's a tall task, right? So when
Mm-hmm.
people, lift their nose at retail, I'm like, yeah, you do it while doing another job. Yeah, I mean,
Right.
institutions don't even do it that well, and it is their job.
Facts. Strong facts. So now I'm going to switch back another gear. When we're talking about long-term investing, I want to give you credit where credit is due. You were one of the big reasons why I was pretty heavy in Pinterest as well. Back in, November, September, early 2020 when COVID was happening. Pinterest was one of your big stocks, one of your big picks. You're like, this thing is going to absolutely rampage. How do you develop confidence in a world of investing where other people are saying something or other people are maybe not saying something? How do you develop such confidence on a position?
Well, I mean, I think the most important part of investing, other than perspective, so talking about a particular company, is understanding what is going to change and what isn't going to change, right?
Okay.
And so with that, like those goggles on, then you can start doing your snooping into thematics that are growing. Okay, so Pinterest lives in the world of digital advertising. So that thematic in and of itself is huge. Doesn't mean Pinterest is going to work. It just means that there's a thematic that's growing. And so there's a tailwind for all companies, right? And then you say, okay, well, we have Facebook. I mean, if you want an investment in digital advertising, why not choose Facebook? Why do you need Pinterest? And I said, well, I think so. That's so. What isn't going to change? I don't think digital advertising is going to change. I think it's going to be larger than people believe, and the compounded annual growth rate taken out to 10 years is already absurd. Okay, so why would Pinterest matter in that space? Well, I saw something changing. I saw over the last few years that chaos, combativeness, that these things were becoming a theme in social media,
Mm,
right? It's like,
yeah.
it turns out that hostility is actually a thematic. If we could plot hostility like we can plot e-commerce on a graph for every year, it's up and to the right, probably parabolically, particularly in social media. Right?
Hmm.
So how do I participate? And so I say, do I think that's going to matter? Everyone says it's never going to matter. I think it will. That's what I said. So I said, okay, well, what's the one social medium that has the ability to participate in this thematic, right? This digital advertising thematic, right?
Yep.
And sidestep hostility. And by doing so, create a moat, be something very different, not be the leftover crumbs from a Facebook advertising budget like Twitter or Snap, right? But to actually be a place where you go in particular for a thing you cannot get anywhere else.
Right.
So that was, I mean, that's a very short version of what I viewed the potential for Pinterest to be. And when I said that, it was smaller than Twitter in monthly active users. And now it's 30% bigger than Twitter monthly active users. And I think it's going to hit 1 billion users.
Yeah. Yeah.
People, there are people, even if they are hostile, who want to step away from hostility.
It's a very intriguing point, man. I love that you brought that up. And that's a different take on what a lot of people have said about it. And again, you were very adamant about your call. And again, just credit where credit is due, man. That was a beautiful, beautiful, beautiful piece of analysis. I mean, COVID was happening. I was saying the exact same thing. I'm thinking people are going to be staying at home, surfing the web, being on social media more, trying to get, their dopamine, trying to get their happiness. And they're going to be spending that money, spending that time on Pinterest. And while it was going lower, I was just continuing to buy a little bit more.
Yeah, absolutely.
So,
In all fairness, anyone who said, I'm including myself in this, anyone who said tech stocks were going to do well in the midst of COVID is going to look pretty smart. So I wouldn't give me too much credit, but
yeah, that's fair. we did get lucky. Tech stocks did continue to go higher, and that was fun. So back to your market making days. Here's a question that so many people ask me. They want me to ask you: do market makers really hunt for stops?
So that's complete fallacy. I don't think people understand what market makers do. So maybe I'll just explain kind of like a job description of what a market maker does.
Bring it.
Okay, so a market maker I'm talking about an option market maker, not a stock market maker. They're called specialists anyway. It doesn't matter. So an option market maker, let's say we're making a market in Pinterest. Okay, so there's several expiries and several strikes within the expiries. Okay, so we have to be on the bid and the offer 70% of the time. We have to be making markets. We don't have to be on the NBBO. We don't have to be the best bidder, the best offer, but we have to be making a market 70% of the time. We're allowed to take a timeout 30% of the time. And usually what that means is a lot of market makers don't like to to make markets in 2.5 year leaps, because who really understands volatility at that level? So we're generally all kind of in for the front 4 expiries, let's say. Okay. So what do I do? My job as a market maker was to make a fair and orderly market. Right? That's it. That's the job. I have to make a fair and orderly market. So what do I do in a room full of people? So I made a market. I happened to have this crazy experience. I was making markets when the first TARP didn't pass. So they were broadcasting it live on C-SPAN,
Oh, wow.
the House's vote. And once we crossed the 50% line, we knew that it wasn't going to pass, right? So the VIX went over 80. It became illegal to short stocks. All kinds of things were going on, right? So it's total catastrophe. Okay, so in that moment, what is it that a market maker has to do? Well, I have to make a fair and orderly market. That means in a market where everybody was selling, I had to stand up in a crowd and raise my hand and saying, I'm bid, because that's my job. I had to make a fair and orderly market.
Okay.
Market makers have no idea about other people's positions. And people say, oh, the market maker screwed me. No, they didn't. Don't make an excuse for losing money. Market makers are the ones who get screwed. When there's a big order, when someone comes by and sweeps 25,000 calls on a stock that gets taken over 3 days later, where do you think they got those calls? They got them from me, sitting there on the bid and the offer, right?
Yep.
I'm like, oh shit. Like I just got hosed.
Yep.
And then there's no liquidity to close it. The stock moves, so it's a complete fantasy. And I don't actually care if people live in fantasies. I just want people to make money. And I'm letting you know that if you're going to blame market makers for the reason you lost money, what you're not doing is figuring out why you actually lost money. Because you can do this. Retail can do this. It's been proven to me now for 6 years.
My man.
I didn't think it could be done, by the way. So
Yeah.
I'm converted.
Sure.
I thought, no way. No way. Too hard, not enough time to focus on it. I mean, I came from a life of focusing on it 80 hours a week. So of course I thought it wasn't possible if you didn't spend 80 hours a week.
Right.
But market makers don't do that. That's a complete fantasy.
Oh, I love it.
It's a complete fantasy.
Thank you. Thank you for sharing that. And the reason I know that to be accurate, and I totally agree with you, is because you can go back in let's say, I know that Trade Machine has this, and you can do back testing and things like that. But if you just take a back test, right, and you drop on a random day, and you're like, okay, well, I want to buy here with a stop down here, and you're just back trading. Like, this is a fake 100% simulated trade.
Yep.
And like, oh, okay, boom, oh, I just got stopped out, and then then the stock goes higher. It's like, well, you can't say that the market maker did that, because literally this is this is happening years ago on just a random press play type of situations. You can't say that the market maker did that.
It's a complete fantasy. Also, what do people think option market makers are doing? We don't even trade stock. I mean, we're allowed to. I mean, sometimes we try to hedge, but the job of an option market maker is to hedge an option with another option. The only way you can hedge an option is with another option, right? You cannot hedge an option with stock. That's just, if you believe that, and stop trading options. The only way you can hedge an option is with another option. So what do you think we're doing? When people are buying from us, we're trying to sell somewhere else. I'm talking options. It doesn't matter calls or puts. It doesn't matter. A call is a put. It's put call parity. It doesn't matter. Yep. Stock is an afterthought. What do you think? We were going in the market and buying large sums of stock? Do you think anybody would let us do that? I mean, that's just not what happens. It's a fantasy. Now, people want to talk about stock market makers, which would be NASDAQ, or stock specialists, which is NYSE. Look, I don't know. I've never been a stock market maker. I've never been a stock specialist. And if that's kind of your thing, I think it's not true also, but I can't speak from experience about that. Yeah, right? I can't speak from experience about that.
Thank you. Thank you for clarifying, man. That's really awesome. Love that stance. And that's incredible. Ophir, what's your least favorite option strategy?
Buying a call.
Tell me why.
People have this fantasy that buying a call means you're getting bullish on the stock, and I can show you a lot of ways to get bullish on a stock that don't involve buying a call. I don't like naked option buying. You can't make money in the market naked option buying. You can't even do it if you're buying on the bid as a market maker. You have to be selling. You definitely can't do it if you're buying on the offer. So, option trading is volatility trading, whether you mean it to be or not. So you don't have to think you're volatility trading, but you are. So you might as well know what you're doing, right? So there are a lot of ways to get long owning a call and selling something else, like selling a put. You really want to get long? Do a risk reversal. Buy a call, sell a put. You want to get kind of long? Buy a call, sell a call. You want to get long and try to squeeze out some time? Do a diagonal. Buy a call that expires in 2 years and sell a call that expires in 3 months, and keep doing it and keep ratcheting up the delta. There's a lot of ways to get long. Every trade where I've made a lot of money has never, ever been naked long. The only time I've lost a lot of money is when I've been naked long theta. And I've lost a lot.
That's really
in fact, my biggest loss ever was a company that got taken over for a 62%, 65% premium. And I was long calls. Don't you think about that?
Yeah, you're gonna have to run that one by me. How did that occur?
Well, if a stock's at 20 and I own leaps for 35 calls naked, and the stock gets taken over at 32, what happened? It goes to zero. It's over. All the time value gone. I happen to also own 30 calls, the 30 strike calls, but I paid like $9 for them. So I got $2, right? It was a massive, massive, massive loss on a stock where I was dead right.
Wow.
And all I had to do, right, if I had sold some puts against it or sold calls against it, just spread it off a little, would have been another one of those 7-8 figure trades, but it
Yeah.
wasn't. It was the other way.
Yeah.
So my biggest losses are almost always that.
Very intriguing, man. That's a really, really cool point. So when you talk about volatility, do you mostly do spreads, like ratios, calendars, or what's your best favorite way to take advantage of volatility?
So I'm going to do a webinar on how to speculate, but usually what I'm doing is selling put spreads to buy call diagonals, and I'm legging into them. So at the end, it looks like I'm short a way out of the money put spread, which gave me money to buy a meaty call. And I'm selling a further out of the money call that's closer in expiry. So I can keep doing it over and over again until I get what I call free space, which is like now the trade is even. And now I have these free calls. And the more you can do that, the more you can have free bets on, that's how you start making $1 and $10 million a month. That's how it becomes huge. You need to get bets on, speculations on, that end up costing nothing. Right? Or next to nothing, whatever.
Yeah.
Where you own what should have been a $10 call for 17 cents.
Right.
And then you're a cheerleader, right?
Yep.
And then you stock to go up. But if you're wrong, then you lose 17 cents, right? You don't lose $10.
Yeah. Well, how do you hold through like one of those cataclysmic overstock situations, when this happens? Like, how do you be in that position that long to make that amount of money?
Oh, yeah. So it's a really interesting question. So I'm just going to say something, and it will sound obvious, but you might never have heard it before. So I'll say it, you'll be like, that's really not that profound. But at the same time, like, dude, this dude's right. Okay. So I want you to pretend. Let's scale things. Let's pretend that $100,000 is a pretty big position for someone, like on a certain, let's say options. To put $100,000 in options. Okay, so it's like that. That's meaningful. Not their lives, but like not something they would want to lose and be okay with it.
Yep.
But they want to make $10 million, which is, that's 100 to 1.
Yep.
Right. That doesn't happen a lot. It might not ever happen. Okay. And people say, well, that's impossible because you'd have to be very lucky to find that. And I'll say, no, it's very, very unlikely that you'll find it, but it's generally impossible that you'll hold it. The hardest part about making 100 bagger is not selling. And I'll tell you why. When you first put in 100 grand and you're willing to lose 100 grand, it's no big deal. When the 100 grand becomes 3.7 million, you don't think of it as 100 grand anymore. Right. You think of it as 3.7 million. You're like, no, I wanted to take this to 10 million. Yeah, but now it's 3.7 million. You start to lose perspective. Right? So what can you do to gain that perspective? We can talk about that later. But the hardest part about a 10 bagger or a 100 bagger is not selling early. It is absolutely the hardest part. Anyone can look at their trading history and look at a stock that went up tenfold. At some point in their lives, like, man, if I just would have held Amazon.
Yeah, right.
Right. I sold Amazon in 2000 at 113. And I thought that was the greatest sale of all time because I'd owned it. It was the dot-com bubble.
Yep.
Right. So I could have looked at Amazon, like, wow, there's another 20-fold that I missed. Right. So everybody has those stocks. So the hardest part about making a huge trade is not selling.
Yeah.
That's the hardest part. And that's why all of the work has to come before money is committed. No decisions are made with any kind of intelligence while something's happening. It just can't. The trades on Monday were made on Sunday. Right? The trades on Tuesday are made on Monday. You do not make the trade on Tuesday and then figure out what you're doing. Nope, not going to work. You can do it once, you can do it twice. You'll end up getting burned. It's natural human tendency to create a profit loss diagram. So imagine like a normal distribution where you chop off the right-hand side completely because, hey, I'll take 100%, but the left-hand side goes to infinity, right? So that's the natural human instinct to create a profit loss like that. And in the long run, it will destroy wealth. The only way to get through that is to make a plan beforehand so your crocodile brain doesn't force you into the wrong patterns.
Yeah. Now, do you like change your passwords to your account or make someone lock you out or just do your best to be disciplined or what?
No, I mean, I know what I want and I write it down. And then if I change my mind, at least I know that I'm changing my mind. I mean, how many times have you been in a trade and you're like, ooh, it's looking pretty good. It's kind of one of those days, market's up and you're like, I don't know. And then it kind of goes down a little and then it goes up a little. It's like, is this going to make new highs? You've blown it. The fact that you're having this, right? It's over.
You're toast.
It's instead what you want to be is like, look, my goal for this is that the stock goes to $50. Right now, it's having a huge day. It was at 37 yesterday. It's at 43. But that's just like, it's kind of accelerated to where I wanted it to go. But this is what I wanted to do.
Yeah.
Like I didn't. And then one of the great mental exercises to do, what you have to do as a market maker, oddly, you have to recognize what your P&L would be at certain prices. So you sit there and say, like, if we had this example of someone who had $100,000 and wanted to make 10 million, by the way, I'm not trying to encourage people to do that. It's basically impossible. I'm just trying to give a really obtuse example.
Right.
But you say, like, look, if the stock goes to 50, I'm going to be at 3.7 million, right? Am I ready for that? Because sometimes they'll say, you know what? No, I'm not. I don't want $10 million. I want 3.7 million.
Sure.
That's enough. That's enough. Okay, then know it.
Sure. So
you have to be prepared.
What would you say is your most successful trade, Ophir?
Like as in a stock or just in general?
Yeah.
Oh, well, when I was in market maker, I got lucky on Biogen. My most successful trades ever in general are selling out of the money put spreads when there's great volatility. I call them bankruptcy. So there's something called bankruptcy puts. So bankruptcy put spreads, collecting some of that premium and buying far out of the money calls with a lot of time to them. And then maybe shaving some of that off with a little diagonal. And then, so I have had, it's not regular, but I have had these ones where, I don't know, you have, you're short 1,000 put spreads, long 1,000 calls, short 1,000 out of the money calls. And then as time goes by, the stock moves up, you get through your diagonal, your put spreads that you sold at $3 are now, 25 cents. So you might, by the way, you close that trade, right?
Yeah.
And then you've got these calls, you got 1,000 calls, which are worth $17, right? It's $1.7 million, which you didn't really pay for.
Sure.
So it's those trades. And then when they go bad, it's only burned me badly once. It has burned me where a bankruptcy put spread has actually turned into a bankruptcy. But it's very, very rare, right? So for example, what would a bankruptcy put spread on? So I'm doing it on Jumia right now. What's a bankruptcy? I posted on Twitter. That's what I'm talking about. So I sold the 5-3 put spread in 2023. Now, yes, I could get totally hosed if Jumia goes to $3. Yes, I could, for sure. Yep. I just don't think it will. And by the way, with Jumia, I actually did a put spread. Sometimes I would just sell the 3 puts naked, right? But I'm like, I don't want $3. I'll take $2 of a haircut. I don't want $3.
Yeah.
So, and then what did I do with that? Well, I bought the 20 calls. And what do you know? Like, hey, look what's happening. So those are the best trades I've made. So the biggest numbers. They're not necessarily the highest percentage win rates, right? But they're the ones that if you look down my history of trade logs, you're like, okay, let me find the most digits. Like those are the ones with the most digits.
Got it. Thank you for sharing that, man. That's really great. And I love that you did that on that trade too, because the volatility on that was bananas. The premiums were great. And like you said, the calls that you buy, the $20, it was at the time out of the money, right?
Yeah, stock was 13. Yeah.
Yep. So I get it, man. Well, good for you. Now, so again, in that situation, you write down in advance when you want to sell, you have that perspective, you tell yourself, you kind of come up with your number and you just do your absolute best not to deviate. Do you also have like a date in your plan where it says by this date, I won't do this?
So both things can happen with this one. Since it's a Jan 2023, I don't have a real date other than obviously in Jan 2023, I'm going to have a decision to make. Hopefully, I don't know, maybe the stock's below 20. But no, I have a target. Yeah. So it's, it's important, especially as a position gets larger and larger. Like I said, it doesn't matter what the dollar amount. People who have $1,000 now they have $5,000, or people who have $10 million now they have $50 million. It doesn't matter. At some point, it starts to feel uncomfortable, and you got to be prepared. Like, what am I doing this for? What do I think is going to happen? Right?
Yeah.
Like, and you always want to make sure the amount you invest or trade is an amount you can lose. Now, it can grow to an amount that feels like you can't lose. $1,000 can be fine. Then it goes to 5,000. Like, I can't lose $5,000.
Sure.
Well, you got to be prepared for that too. But that's what I do. So that would be my best kind of trade. Yeah.
Love it. Do you ever sell in the money puts?
No. I mean, if I want to get long stock, I don't really mess around, right? Just like
Sure.
get long stock.
Yeah.
The most wealth destroying trade I've done, other than just owning naked options, but in the stock market, is just not getting in, right? So we have this fabulous, it's incredible. This is like, I'm going to tell you a little secret, and this is legal. I want to tell you that there's a thing you can do which goes up. It makes you money 4 out of 5 years. Okay. It's legal.
Okay.
And not only that, but the times it goes up, the years it goes up more than the year it goes down. Okay? And this thing is completely legal. It's called the stock market.
Yeah.
So if you're not sure if you should get in a stock or not, well, 80% of the time you should have. So just go ahead and lean on that.
Right.
And you can dollar cost average. You don't have to shoot your wad all at once. That's not, you don't have to put whatever money is big for you like down all at once. So that's my greatest wealth losing trade, is trying to get something for $1 less. And in particular, you think about something like Jumia. So I think Jumia has the possibility of going very high. I don't want to put a number on it, but let's just say more than a tenfold. Okay.
Yep.
And I just think to myself, like, if that's what I believe with some reasonable amount of capital, I'm not saying I'm gonna put all my money in it because I think Jumia is going to that number. No, I'm willing to put some money in it, and that's my guess, right?
Yep.
If Jumia, let's just pick a number. If Jumia goes to 300, do I care if I got it at 32 or 27? No, but you know what I will care about? If I didn't get it and it goes to 300.
Yeah.
Then I'll care a lot about those $5.
Yeah.
And another thing is, by the way, if Jumia fails and goes to 0, I'm not going to care if I got it at 32 or 27 either.
That's a very, very good point.
The only time I'm going to care is if I don't have a position.
Yeah, agreed. And I tell people as frequently as I can, Ophir, like in some situation, as you mentioned earlier, you don't have to take your entire bankroll and get in then. Buy 10 shares.
Yeah.
So you have a position. Wait a week. Right? Just buy 10 shares at market. Don't try to even get fancy. Just open up the broker, 10 shares, boom, you're in. Now, FOMO is gone. You're in, your brains can calm down. And a week later, you can start taking more positions.
Yeah. And if you're trading options, you can do it. You can even leg it, right? So let's say you're like, okay, I want to sell puts to buy calls. Okay, well, just buy the calls.
Yeah, sure.
But I'm talking like leaps, right? Just buy the calls and then you're in. Okay. And the stock starts going down. You're cheering it. You get to sell the puts.
Yep.
For more.
Yep.
And if you're wrong and it goes up, nobody complains when the stock goes up and they're long.
Yep. Right.
So you can even cheat so the point is to get your crocodile brain out of the way. And that's called perspective. And the way you gain perspective is by gaming the trades for yourself.
Yeah. How should retail people and non-math geniuses do research on companies like Jumia, for example? You mentioned this one. This one could be a 10 bagger, which I agree with, by the way. And I talked to Gene Munster a few weeks ago. And he said the exact same thing. Yeah. So how should retail investors research companies like this to find out what the next one could be?
Well, so again, all of my research starts at a very basic level, like what's changing and what isn't changing. So, we know that e-commerce has been and continues to eat the world. Okay, well, that's one place. What else is changing or isn't going to change? Well,
healthcare.
Sure, absolutely. Yep. Healthcare, genomics. Yep. In this space would be, what is changing? The way we pay for things. Like, what do those like green cotton things in our wallet do for us now? Like very little. Like if someone were to hand me $500 in cash, I'd be like, what the hell do I do with this?
Yeah.
I don't spend cash. I don't have cash. I don't go to the bank. I mean, I might just put it in a drawer and find it 10 years later. I have no use for cash. Right.
Yeah.
So like, okay, so we're going to digital payments. We're going to e-commerce, which is just digital commerce. Okay. Well, what do I own? Well, I own Shopify. Okay, good. I own Farfetch. Okay, good. Well, what about opportunities in other places, right? Like, well, what's going to change in the world? Well, unless we're saying that everyone in Africa is somehow magically different than everyone else in the rest of the world, which I think is a pretty bold statement, then they're going to go digital too. So, okay, who has the ability to make that happen? It's very, very disparate. It's difficult to aggregate. It's difficult. Africa is a continent, not a country, right? So So then you start looking at who's built something that tries to tackle this problem, that in the worst case scenario, they've built something that someone has to at least use. Like there has to be, like, maybe they don't hit their home run, but they hit a single. So Jumia has 3 parts to its business. Each part is 17 parts, but we'll just roughly call it its marketplace, which is e-commerce. Okay, we all understand that, but there's no particular reason to believe Jumia's e-commerce will win other than it's a leader now. They have Jumia Pay, right? Okay, what's going on in Africa? Well, they don't even have banks in some of the countries.
Yeah.
Right? It's like, okay. And then logistics, it's a freaking nightmare. Right? What Amazon would call their last mile, which is like driving into a suburb of a large city. No, in Africa, it's like it's going into a village, right? So who's produced a logistics network that actually can do that? Jumia has. And that means even if someone else comes in bigger, how are they going to logistically handle the delivery of packages? Well, they're probably going to lean on Jumia anyway.
Yeah. Now, where'd you get this information? I mean, the Wall Street Journal, did you go to Africa? Did you call somebody? Where'd you read it?
I have a trade group and people, we're always throwing ideas at each other, and sure. We try to, like, if someone puts out an idea and we try to destroy it, and then, like, if we can't destroy it, then we're like, okay, I guess we have to do this. And then since we're all investors and traders, we're all cheating anyway. So I don't mean that in the bad sense. Cheating is like, it's not like we're just waiting for everyone to do feedback. We're like, I'm going to go find the answer myself. So, you start doing research and, like, okay, well, what's going on in Africa? And, like, okay, I knew what Jack Dorsey was doing with Square, and Jack Dorsey went to Africa. I was like, well, why the hell is Jack Dorsey going to Africa, Square? Right. And you start like, oh, hold on a second. And you start looking at the number of internet users in Africa and how many there will be. And you start to look at the demographics, right? Like, dude, everyone in that country, like, the median age is 19, for crying out loud.
Yeah.
Sorry, not in that continent. Sorry. It's like, and then you're like, well, what are the, like, is it all, like, is it 55 different countries that are all the same size? Like, no, dude, Nigeria is going to be the 3rd largest country in the world. Like, okay. So there's an organization here. Okay. And, like, and so that's how the research comes together. You start to you look for a thematic, you challenge yourself. Like, well, I don't know, like, something I wouldn't have looked at. I don't know, Africa, and then you look at Africa and, like, oh, like, there is a thing, and so that's it. And everything I invest in for the long term always has such a strong thematic, such a strong tailwind that even if I'm wrong, the company's probably not going out of business, right? Yeah. So let's say Twitter went public and I was like, Twitter's going to overtake Facebook. Twitter's a really bad example. Twitter's going to overtake Facebook. Well, you would have been dead wrong. But Twitter's growing. It's multi-billion dollars in revenue. It's profitable. It's you
didn't get hammered on the stock. You didn't.
No, you missed the whale. But okay, the thematic is there. Yes, absolutely, the thematic is there, right? It happens a lot in a lot of industries. Like, well, just and so it's also a lot easier for business to grow faster than analysts expect if the thematic itself is pushing it forward. Right. This is where analysts really, really miss the boat. Right. This is the only place where there's really edge in long-term investing, is understanding that what you can write down on a piece of paper and in a graph, we are bounded by what we think is conceivable when we draw these graphs, when analysts draw these graphs. I'm an analyst of record, right? I do this. I'm through Refinitiv, I'm an analyst of record for public companies, right? The calls, analyst estimates, XYZ company, B analyst estimates. That's me, right? Yep. So I know what my shortcomings are, right? So how do I find the things that are they're going to be, it's almost incredulity, right? How it's incomprehensible that it's going to be a number so much larger than I think it's going to be. It happens time and again, right? I mean, nobody thought Salesforce could do what Salesforce did. I'm not going to start naming companies because no one thought any of these companies could do it, right? So, but what was really behind it? Well, there's a thematic that people vastly misunderstood. Like the idea of the cloud and how, it had to be the 3 or 4 largest technology companies with the most money in the world. We're just going to pour unthinkable amounts of money into this thing called the cloud, right? So that everyone else could use it. Like, so it had to be Amazon and Microsoft, should have been Apple too, but it had to be, and Google, it had to be them. Like, no one else had that much money, right? But nobody thought about what that meant, right? And so you start doing revenue forecasts for Salesforce or for other technology companies or software companies. And if you mistake the strength of the thematic, that's how you when analysts do, that's how you can find the alpha, because they almost always underestimate revolutionary changes, right? Yeah, it's very easy to talk about, like, pharma, right? Or like the Caterpillar, right? Like how many buildings are going to be built, right? But it's pretty ethereal to talk about things like genomics. Like, Well, what if it literally is, well, literally is a big word. What if it practically is 2 billion people getting their genes sequenced and then following up every year?
Right.
Something that's so incomprehensible to any kind of thing that you can write down in a forecast, right? That's where the alpha is, right?
Man. So Ophir, I will just say up front, biggest fan, dude. Like this is, I could listen to you talk for hours and I could absolutely read any book that you ever write. And I could have this conversation for another 4 hours, but I will not. 3 more minutes. One other question. Anything new and exciting on the roadmap for Trade Machine next year? And Trade Machine is just an absolutely superior product to so many others that exist. If you're listening to this recording, you're still interested, please get it. Please check it out. I'll have my link below. But that's my question.
Yeah, we have something very big coming out. I'm pretty excited about it. I'd love to hear your feedback. As you know, I believe hostility is a thematic in social media.
Yep.
So we have coded our own social medium, and it's going to be inside Trade Machine for traders to talk. And inside that, we're going to allow people to paper trade. And the paper trade is going to be using our back tester, so there's no fudging it. And then people are going to start having their portfolios showing who's doing the best, who's doing the worst, and people can start following those people. And as you know, Trade Machine is built for sharing, right? So you can just click on a link and there's that link has, $17.4 million data points in it. And once you click it boom, it brings up everything, right? So people are going to start sharing their trades, what's working and what's not working. And I hope to create a community which already lives on Twitter anyway, but in a place where there's less hostility and more focus, with the ability to start following influencers. And in this world, an influencer isn't the guy like me who gets on TV all the time. No, fuck me, right? It's about the guy that finds the trades and consistently wins. Mm-hmm. That's the influencer. And you can have 1 follower on Twitter, or you can have 15 million followers on Twitter. It doesn't matter, because we're in the world of finance. We have a scorecard, and the scorecard does not require that you have a lot of followers. Our scorecard is our P&L, and it follows us for better or worse, right? So we're bringing this social medium to Trade Machine and Stock Trade Machine, actually. Yeah. And we're hoping that at the very least, people start sharing their favorite back tests, which of course they do anyway on Twitter. We get thousands of tweets a day on it, but this will be a little bit more controlled so that it doesn't get lost in all the other stuff on Twitter.
Sure. That's huge, man. That is huge. Thank you for sharing that with me. Epic stuff. Last question up here. Who is your trading mentor? Who do you look up to?
Well, I have trading mentors. The question is not hard to answer because the names don't come up. I'm just not sure they want me to say it out loud. So yeah, so there are some people that finance is a small world. It's not like the movies. Like if you're an actor and you have 3 million followers, well, you're nothing. In finance, if you have 300,000 followers, you're King Kong. So you know what I mean? Like it's true. You and I live in a world that's much smaller. Agreed. So I don't mean they're celebrities in the sense of like it's Brad Pitt, but they're very well known. It's been my great fortune for them to become interested in what I do. Because of my track record through all of this. And so they're my mentors. They challenge me. I challenge them. They make it impossible for me to not continue to work all the time. If I'm not looking for something, I know I'm falling behind. I know it 100% I'm falling behind. And so that's it. And then the other thing, my greatest driver and mentor really is just, this comes to CML Pro, is our members. How can I not be 100% dedicated to these people who are trusting me with my research and not just dot every I, right, and cross every T, but do it 100 times over. Sure. And that as a group, it's a group of people, right? A very large group. That group of people, they're my mentors. They make me do the research all the way to the end, right? Yeah. All the way to the last period, in the last paragraph, in the last sentence, in the last statement, right? It's gotta be the best I can do. And it will not be right every time, 100%. We can just stop that right now.
Oh yeah, for sure.
But there's no way I'm gonna put something out there and be like, oh man, I didn't even think about that. Right.
Killer.
So Yeah. And so for the actual traders, I just can't say.
That's fair, man. Totally fair.
Yeah.
All good. Well, hey, I really, really appreciate your time immensely. I will make sure that I'll share this and get all the good show notes in. And so thank you for your time tonight. I learned a lot. I think it was very, very valuable for me and for all the listeners who are a part of Real Life Trading and on our YouTube channel and all of our social media. Just want to say thank you, Ophir, for being here.
It's been my absolute pleasure. Thanks for having me.
Yep. Likewise, man. Have a great rest of your night.
You too.
All right,
Bye.
All right, folks. And there it is. Trading God, trading legend, if I'm allowed to say that, if it's possible. Make sure you follow him on Twitter. I follow him on Twitter. Great follow. Genius, incredible human being, giver of so much, both knowledge, time, wisdom, and generous offerings with his money for so many charities and so many events that he does and just people that he pours into. Ophir, thank you for being a part of the financial realm and the stock market. And it is a better place because you are here. If you are here and you're listening to this episode and recording, make sure you leave a comment, subscribe, and thank you for enriching lives. That is the mission of Real Life Trading. You rock. And until next time, love life, live life, and trade it. Bye.